is my girl's first trip to Bangkok with my husband as well. And this Bangkok trip is also his last trip with us.
They were a happy family with a young child. Then, tragedy struck. Irene's husband was diagnosed with stage 4 colon cancer. They faced medical bills of as much as $25,000 a month.
The cancer is very aggressive. He went through all the treatment and it took about 15 months and he passed on.
Irene was the sole breadwinner, but as a financial advisor, she practiced what she preached and had sufficient insurance coverage to tide her family through.
Firstly, because the medical bill is really very high, that's one. And because of that treatment period, he's not able to work. All right. So the insurance also helped to cover in terms of the family expenses, making sure that we have more time, not to worry about money, but able to spend time focusing on treatment, focusing on the kid.
All Singaporeans have MediShield Life, a basic health insurance plan by CPF for large hospital bills. But Irene's husband didn't have sufficient enhancements that covered private hospitals, something you could consider as part of your insurance portfolio. Adding a critical illness plan to this would round up what experts say is essential medical insurance coverage. This would pay out a lump sum to help foot medical bills as well as ease the stress on your family.
When you're in a flight, there's always a safety briefing that says help yourself first before you help people around you. So when you translate that to insurance, what that means is that you should be buying, prioritizing insurance that provides a living benefit when you're alive should you be hit with critical illness. And the aim of such coverage is to ensure that you reduce the financial burden on yourself and the people around you should you be struck with a critical illness.
The Life Insurance Association estimates that Singaporeans are underinsured with a 74% shortfall for critical insurance. And for death, there's underinsurance of 21%. It sets the benchmark for adequate protection as 4 times of annual salary for critical illness and 9 times annual salary for death coverage.
What this means is that based on their study of how much people actually require, on average, someone needs 9 times of their annual salary in case they die to look after the dependents.
So how do we ensure that we're protected in times of need? If you're just starting out, make sure you have the essentials, starting with medical insurance. Once you've got that sorted, you could consider protection cover that will take care of dependents. Such plans will pay a lump sum in the event of your death, and if you have the budget for it, start to save for retirement. That will round off the essentials needed. Whether you need more will depend on your individual circumstances, such as the number of dependents you have, as well as your lifestyle.
Don't need to overinsure, buy what is enough based on the current situation that you are at. So everyone is different, single to married. So every stage of your life, when your life stages change, you should do a review. Single to married, now you have a spouse to take care of. When you have kids, first one in, get a house, you get a car, second kid come in. Every situation like that, you should sit down and take stock. Good to have would be things like, it's subjective, right? Like personal accident plan. It's good to have. Maybe some interesting feature like a diabetic cover or dementia cover. These are all new enhancements in the insurance plan that they added now. But these are good icing on the cake.
There's a huge array of plans available, so make sure you're not buying too many. Experts we spoke to suggest spending at most 15% of your annual salary on insurance coverage.
There's no single number that would be suitable for everyone. I always go back to this need to do a financial plan, to look at your needs.
It's just as important to ensure that you're not overinsured. For instance, spending money on multiple plans that cover the same conditions, because often you can only make one claim.
For example, certain plans you can only claim once, but you have 2 plans from 2 different insurance companies. So for that, it doesn't make sense. Like personal accident plan. If I have an accident today, I can only claim from company A, but I have 2 plans, maybe 3 plans. At the end, I'm paying extra premium, but I'm not able to do the full cover.
You should also ensure you're not paying for protection you don't need. For example, having an abundance of coverage if you don't have financially dependent minors. Experts agree that the best tip to save on insurance is to start young.
The earlier you get into insurance, the better. This applies both for protection insurance, where because when you get in younger, you're less likely to have health conditions. You're likely to get in on a lower attained age, which means a lower premium, level premium for the term of the policy. And when it comes to retirement provision, you benefit from a longer period of compounding.
You can also consider term insurance plans for more affordable protection. The premiums for such plans are lower, but they don't have a cash value once they expire, unlike whole life insurance plans. In addition, check to see if you can benefit from group term insurance, such as MINDEF's group insurance, which can provide coverage for a lower amount. It's critical to shop around and read the fine print. Check what your options are if you cannot afford the premiums temporarily.
Really get into the habit of scrutinizing the policy coverage. Do not be influenced by premiums alone, because premiums hide many things behind the policy. Some useful coverage would include things like waiver of premium on critical illness. So that allows you to add an additional, to make your policy or your retirement coverage multi-purpose, so to speak. So if you are hit with a critical illness or an inability to earn income for a period of time, premiums are waived and your savings plan is not derailed.
Ultimately, how much insurance you need depends on your life circumstances, which change over time. So review your portfolio regularly to get your money's worth.